So we just had some major macroeconomic data points come out that I wanted to share with you guys because it's a bit concerning and it kind of tells a story of why the market is falling down. We had this gap down with the S&P 500 and we also talked within the Push and Profit private group why Nvidia just sold off tremendously in the after hours, but I want to talk about what's currently going on. And for those that watch the channel, in a recent video, I made a joke or a phrase. I said, don't be a silly salmon. And in a sense, I was just saying, hey, look, don't assume that we hit the bottom because we may end up seeing some more selling coming into play, especially because from a macroeconomic standpoint, there hasn't been any major resolution. Right. And, when I say don't be a silly salmon, I had a picture of like a salmon jumping into a bear's mouth because that's often what happens. Right. The salmon will just willingly jump into the bear's mouth. And so just kind of drawing a parallel like, hey, you don't want to jump into the mouths of the bears, the people shorting the market, especially when things don't look good. I mean, that's kind of why the market's falling down. And we see this flock to gold, right, hitting new all-time highs because gold is kind of like the safe haven asset right now when there's a lot of uncertainty. But of course, why is there a lot of uncertainty, right? Look at this gold, 306.75 it hit. Well, let's talk about the macroeconomic data points. So first off, right, Fitch rating, right, lowered its forecast for world growth in response to the escalations in the trade war, and they cut down the growth for China by 4 percentage points and also the United States by 5 percentage points, right? Okay, well, that's kind of concerning, right? Because from a macro sense, that means that uncertainty is still out there. And of course, why wouldn't it be when the trade war is still going on? Of course, yeah, we had the administration mention how they were going to be pausing tariffs for or delaying them rather for a lot of countries. But what's going on is that it's still in play. We haven't had any significant deals or negotiations announced. And trust me, once they do come out, I'm sure the administration will want to just announce them in the headlines as soon as possible. But we haven't heard them come out. So that's a bit concerning. But we also had what we came out with today, which was the U.S. retail numbers, right? And what we ended up seeing was that we ended up seeing retail numbers, retail sales jump up 1.4%, which is the highest that it's seen in 2 years. Now, you have to be very careful when you look at data like this because some headlines may say, well, look, the consumer is really strong. They're doing a lot of shopping. They're doing a lot of buying. This is great news. But you have to actually parse through the details and kind of understand the context, right? It's not just, hey, numbers went up, that's good. You have to understand the nuance. Well, why did the numbers go up? Well, it's probably because we have a lot of people shopping for big ticket items like cars before the administration announces tariffs that could raise prices, right? So it's sort of this front running, right? So yeah, it surpassed Wall Street's expectations, right? It looks like, oh, look, people are shopping. This is great for the economy. But it doesn't really mean that the U.S. economy is trouble-free because the trade war threatens to boost prices, which fuels inflation, and that slows the economy in the future. So that's something we want to be mindful of. And that's why I say you can't just read the headlines. The headlines are going to say, this is great news. But it really isn't that great when you actually kind of look into it a bit deeper. And one thing I do want to point out is we are seeing consumer sentiment fall off a cliff, right? We saw this report last week. And then we also saw small business optimism falling down, right? Small business optimism is also falling down, right? There was a lot of euphoria as Trump was, first elected. But after his first couple of months in office, it's been kind of dropping down, and it makes sense. And that's why we're also seeing small business uncertainty kind of creep up, right? I mean, let's go ahead and let's look at the VIX, right? The volatility index. Let's just take a look at that. So volatility, okay, so it's actually not as high as from what we saw earlier in the month, just a couple of weeks ago, but it's still relatively high. It's above 30, right? So that's a bit, that's not good news. So honestly, one thing that I mentioned for those within the Push and Profit private group is that, hey, we may end up seeing, the S&P 500 kind of fill this is a continuation gap. I'm sorry, this is a breakaway gap. This was a continuation gap, and we don't tend to see these gaps often filled, but we may very well, especially if there's still a lot of uncertainty and a lot of bad macro data come out, see the market fall down and fill that gap to 525, which from a technical perspective is kind of the resistance that we had literally almost a year ago back in April. So isn't that crazy? Oh, with all the rallying the market did, we're kind of back where we were in 2024. Wiped out a whole year of gains with what's going on with the trade wars, right? And the uncertainty. Now, real quick, if you're wanting to learn how to analyze a company like a pro, then make sure to check out the Financial Modeling and Valuation Analyst Certificate that's offered by the Corporate Finance Institute, as it can literally take you from having no clue in what to do in Excel to becoming an expert at financial modeling, since it's going to go through building financial models from scratch, valuing companies and analyzing financial statements all through a super structured format. Plus, having the FMVA certificate on your resume is going to help you stand out, especially if you're trying to break into a career in finance, as a lot of professionals at firms like Deloitte, Morgan Stanley, and Goldman Sachs have all taken CFI courses. But of course, if you're not trying to break into finance, the knowledge alone is really good if you're just trying to be an independent investor. But with that said, if you're interested, make sure to check out one of the links down below to gain access to all the certificates that you can earn with the Corporate Finance Institute. But with that said, I just wanted to provide a quick update just so that you guys are aware. Again, for those that are interested in the Push and Profit private group, where I do my daily briefings and we talk about the market from a deeper scope, make sure to check out the links in the description below, and I'll see you guys on this next video right over here. Take care, guys.